happened is the government spent a lot of money during the COVID event, and they never cut back. In fact, they stepped on the gas. And so we just finished a year where they spent $6.75 trillion, which is almost as much as they spent in the peak year of COVID. And we've got an economy that's full employment, close to full employment. We've got, a stock market that's at record highs. And of course, they did a lot of it. They did this to try to win the election, and they weren't successful. But I think that's part of the reason why they were so profligate. And, really until Trump won, and now they've created this Doge committee, there's been zero discussion about the debt problem, but it's a big problem. I mean, it's going to cause serious economic issues in the next year or two.
Yeah, give the audience a little bit of a breakdown over the next year. I mean, we're going into a new presidency. We already know what that looks like from the past time, but some, new regulations. Maybe there's tariffs. What's this year going to look like?
Well, it's hard to say. I mean, so as you know, this Doge committee, Ramaswamy and Elon have decided they're going to try and cut $2 trillion in annual costs. And, my response to that is good luck. I mean, I'm all in favor of what they're trying to do. And I do believe they will cut some costs. No doubt there is some government fat. But as I said in the speech I gave here a few days ago, 80% of the money that's spent by the federal government is in the big four categories, which are Social Security, Medicare, defense, and interest. And so it's just the alternative. But, I'm not sure God himself could solve this thing simply. It's a mess. It's a real mess. And this is a fiscal mess without the stock market or the economy being in trouble. I mean, the last two times the stock market went down substantially in the 08 bust and in the 2000 bust, you had enormous deficits following it. And you had an enormous unemployment following it. And so if our stock market gets broken at some point, then I think I'll move into kind of the next point, which is, I think we know how the Federal Reserve is going to have to respond. And I call it the big print. Mm-hmm. I mean, they're just going to have to, go back to QE, go back to ZIRP, maybe do yield curve control. I mean, and we're already starting to see that. I mean, I find it extremely interesting that the bond market, here they are, they've cut interest rates, and yet the longer bond, has gone up since that interest rate cut. And I'm kind of like, wow, how did that happen? Doesn't make sense.
In your presentation, you said that it's only a matter of time. This big print is coming, as you just mentioned. The Fed's balance sheet will go over $20 trillion. Elaborate on this. How soon? What does that look like?
Some people say that's hyperbolic, but it's not if you really look at the trend. I mean, if you look at what they created in the dot-com burst, if you look at what they created in the GFC, if you look at what they created with COVID, each one gets progressively larger, right? It took Bernanke 4 or 5 years to print a couple, trillion, 2-3 trillion. It took Powell six to 18 months to print. Just don't know. But the reason, I have an extremely, in my, and this is just my personal opinion. I've been wrong a lot. Okay. But I have a very high conviction level that the math is compelling that they will get dicey at some point. And I kind of put the outer limit on the diciness at 2 years. There's no way they can keep this going for the next couple of years. But I've been wrong about that before too. I mean, in 2008, I thought, we were going to have a much longer crisis, and they did a lot of sneaky things that managed to, hide the inflation, put it into the assets, not in CPI. I mean, in 2008, I thought we were going to have huge CPI inflation. We didn't, and we didn't because they changed the rules and allowed them to pay interest on excess reserves, and so all the money got stopped up at the banks, and then it went into the assets. So, yeah, it's
a bunch of politics too.
Yeah, there'll be a bunch of politics too. I mean, it's very interesting as we watch who they're trying to pick a Treasury Secretary, right? We watch who they're going to pick. Clearly, the most intelligent and thoughtful guy would be Bessent. But, I think Elon wants to break a lot of glass, and he wants to get in there and just start, cutting away at everything. And okay, I mean, that's fine. And there's an argument that a lot needs to be cut. But guess what? If you do that, the stock market's you don't do that without having a serious economic downturn, right?
There's got to be consequences.
Yeah. I mean, so back again to my initial point, which is they're trapped. I just don't see how they get out of this. He owns it, and they could mark it up. They could turn around, and this is what Luke is proposing, and it's a smart idea. They could mark it up to some saying we're going to go back to a gold standard and buy and sell at that price. But anyway, back to the math. Back in the 60s, early 60s, before we started the Vietnam deficits, you could take the monetary aggregate, divide by those number of ounces, and you came up with a $35 reference price, which is what they had, they set it at Bretton Woods. Okay. Same math, broad monetary aggregate, 261 million ounces, $80,000 an ounce for full coverage. I mean, it's nuts, right? I mean, it's just now you don't need to have full coverage to be on a gold standard.
Yeah.
There are many successful gold standards that have worked at 20% coverage or 30 or 40% coverage. But the point is even 25% coverage would imply a $20,000 an ounce gold price, which is a long way from 2,700. So gold, if gold is going to be used as money again, it is deeply undervalued. Deeply.
What are your thoughts on Cynthia Lummis, the senator trying to do a Bitcoin reserve?
I think it's great. I mean, honestly, I'm as you know, I'm a big Bitcoin bull, and some gold people hate me for that. But I think they're both forms of sound money. It's analog sound money and digital sound money. We're moving into a digital world. I do think Bitcoin will ultimately prevail. It's going to take a lot of years, decades, but it's going to happen, in my view. It's a smart thing, in my opinion, for the U.S. to lean toward the Bitcoin side, and the reason is that China and India and the Middle East, and none of us know the future, right? If you look at history and if you look at the cycles and you look at what tends to happen when it runs, and it does one of these runs, it tends to go 4x the base. The base was kind of 50 or 60. So I easily see it in the cycle hitting a peak of 200,000. Then everyone will be out over their skis and a lot of people will be levered up. And then we'll have a cleansing downturn, which will probably bring it back down to 100 or so. I'm still comfortable buying it here and have bought some here. But as it goes higher, I'm pretty loaded up on it. I probably won't chase it into the 200-300 range. I know there are people who think it'll go to 300, 400, 500, and that's possible.
But when does it stop, and how dangerous is it?
Well, that's the thing. I mean, I like to use a model called the power law model, which is a log of time and a log of price, and it kind of has a baseline. And what it shows is that it tends to go 1 to 2 standard deviations above it on these bull market runs, and then about 1 standard deviation below it when it corrects. And that's, you got 5 of these cycles now since inception. So if you get on Twitter and you go to Fred Krueger's site, you can see a lot of that, and it's very well mapped out. And so you can kind of get a sense of what's likely to happen to the price.
I'm curious, we just got this new information out from the ECB. They had their financial stability review, and they really are highlighting some growing risks about a new debt crisis in that region. We hear it from China everywhere right now, to the point where, what does this look like? I mean, if we're in this whole everything bubble.
To be honest with you, though, I don't think that alone solves it. I think we need to, the governments actually need to decide to do a reset, a Groman-like reset, where we say, okay, we've sinned and we're going to devalue this debt in real terms, which means it's going to be very bad for debt holders. And it's going to be somewhat one-time inflationary, and that's going to be painful for humans and all citizens, sadly. But once we do it, we're on sound money. And once we're on sound money, things get a lot better. And I've studied a lot of inflations, hyper and just high inflations. And the history shows that when you return to sound money, life gets better. Now, getting from here to there, that's going to be rocky, right? I mean, let's not kid ourselves. I mean, this is... in fact, in my book, I talk about this a little bit. I call it the evolution of an alcoholic. I mean, you're drinking and you're drinking too much, and that's the equivalent of debt. And then, eventually you decide to go cold turkey. Well, it's going to hurt.
All things must come down, right?
Yeah,
okay, before I let you go, because I know you're a busy man here at the conference, it's a 50th anniversary, obviously. Investor sentiment changed a little bit to you this year?
Yeah, I mean, people are happier because finally our stuff's starting to work. I mean, I've been here a couple of years. It's been pretty. Goodbye, CNN. Goodbye. Yeah. Now they're listening to you. They're listening to Adam Taggart. They're listening to the smart guys on the web, right, and getting the true story. And then and on the money side, they've got a form of money that the government can't screw them with. That they can't dilute because they're constantly diluting the beer. So, yeah, it's all. I'm very optimistic about the future. But the book is I'm very cautioned, I caution people about, you want to be on the right side of this because you're not going to get a do-over, right? I mean, if we really go through a monetary reset, it's a one-time deal, and if you've got bonds and you don't have, sound money, I think your condition's not going to be very good.
Well said. Yeah, well said, my friend. Okay, well, we're in the in-between. So obviously post Trump getting in and the inauguration, we'll have to get you in a couple of months, see what that all looks like. Yeah,
we'll see what it looks like. It's going to be interesting. I've got the popcorn out.
I know, me too.
And my partner and I were talking constantly. I mean, just this Treasury Secretary thing. Yeah. I mean, is it Lutnick? Is it, Bissett? It's wild.
I don't know. I mean, he seems to have some interesting picks, but so far, I mean,